Welcome to Drill Down Earnings. We have second quarter results from Apple. You know Apple. They make phones and stuff. But this is the business story behind one stock on the move. A stock that's barely moving, and I'll explain why. I'm Cory Johnson, Chief Market Strategist for the Futurum Group. Second quarter earnings for this company, a beat or a miss, and this was a beat, but I want to get into the business here, what the business actually did. And in the June quarter, they had some interesting things. Maybe most importantly, their services business, which they said was going to be an emphasis years ago, they're finally saying, yeah, services had an all-time high and is doing quite well. So is the rest of the company. June revenues had a record number of $85.8 billion. That's up 5% from a year ago, but look, revenue's rising again. It's turned in the right direction after many negative quarters and a positive quarter, then a negative quarter. Now we're back to positivity, 5% revenue growth on a year-over-year basis, holding steady operating margins throughout. Of course, that's a hallmark of Apple in this modern era. The iPhone still dominates this business, 46% of revenues. But in the quarter, you saw 28% of revenues going to services, now the second biggest part of Apple. But the slowdown, slowdown's kind of strong. The growth rate in iPhones is just not great, negative 1% on a year-over-year basis, and that's been gently sliding over time, even as services has shown really solid growth at 14%. Those people getting that monthly bill asking them to pay for either their Apple TV or their storage or whatever else is working for Apple and growing steadily at double-digit rates. It's also important to note that this company, China. So China is still a question mark as to what's going to happen in terms of a pickup in sales. They still think they've got some hope for China, but AI, well, it's the promise for their phones in the future, could be more difficult under the laws in China where the data has to remain local and they can't use the user experience to upload data globally. It's a real challenge for Apple and any companies, American companies wanting to do business in China using AI because the data's got to stay local. So it's an interesting challenge and one that Tim Cook's talked about just a little bit about. But I also want to point out some of the financial machinations here. This company's got a small dividend, but they're also buying back shares. And the result of buying back shares has improved earnings per share. I went back and looked all the way back to 2020. And if they had not, they've taken the share count down steadily, not a lot, but steadily. So the diluted share count has decreased and decreased and decreased every quarter. The result of those buybacks has boosted earnings per share. EPS is now up 15% in ways that it wouldn't be had it not been for the buyback. Put another way, the buyback has added 15% to earnings per share for this company in the results that just came out. Now, we look at what the stock did afterwards. The stock results after the market report barely moved. The market didn't really know what to make of this. Stock up down about 0.5% at the moment. The conference call is just ending right now. And for the last year, the stock's up only 12%. So I think the market is clearly waiting for something exciting to happen. And yet exciting things happening is exactly what the kind of unexcited CEO Tim Cook had to say on the conference call.
The install base hit an all-time high during the quarter, and so we were very happy about that. iPhone in general grew in constant currency, and the 15, as you point out, if you look at the same number of weeks of the 15 from launch and compare that to the 14, the 15 is doing better than the 14. And so that's kind of a state of where we currently are. In terms of upgrade rates, it's very difficult mid-cycle to call upgrade rates. I would just say that with Apple Intelligence, we're very excited and about the level of value that we're going to provide to users. And we believe that presents another reason for a compelling upgrade.
So fundamentally, Apple's taking its time and sees these things improving, sees the importance of AI going forward. It's not in these results, and maybe that's why the market wasn't too excited, but it seems to be on the horizon. All right, what's the one number that tells us a whole lot about this company? And really, your big takeaway about these Apple earnings, I'm going to have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Apple just reported second quarter earnings. Here's your essential summary, everything you just want to know if you want to remember this third quarter earnings. $85.8 billion in revenues, the most service revenues they've ever had, and up 5% from a year ago. That's good. That's growth where they haven't had it, and they're happy about that. But the thing they're not happy about brings us to the drill down bite, the one number that tells us a whole lot, and that is China. China continues to hold back results. While revenues, were up 5%. Without China, the business is up 8%. China, however, was down 7% on a year-over-year basis, still not recovering and holding back the overall success of Apple. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. Drill Down Earnings, part of 6.5 Media. And for proof of that, check us out on YouTube at 6.5 Media on YouTube. You can also, of course, check us out on Drill Down Pod on TikTok and on Instagram. And yes, at Cory TV on X, the thing they used to call Twitter, a place where you can comment, tell us what you like, tell us what you don't like, tell us what we should be doing. We'll be listening.